$100 million. It sounds untouchable, infinite, almost mythical. But in 2026, it's not what you think. Because $100 million doesn't just buy luxury, it buys positioning, it buys access, it buys insulation from chaos, and sometimes it disappears faster than you'd expect. Picture this. You wake up in a glass penthouse above the skyline of New York City. Floor-to-ceiling windows. The city below you feels smaller than it did yesterday. Or maybe you're stepping onto a waterfront terrace in Dubai where the marina reflects off polished marble and the air smells like sea salt and money. Or perhaps it's sunrise in Monaco. Yachts resting quietly below your balcony. Silence, except for the hum of engines worth more than most neighborhoods. That's the image we're sold. But here's the part no one talks about. At this level, wealth stops being about things. It becomes about leverage because $100 million isn't spent randomly. It's engineered. Some of it becomes territory. Some of it becomes status signals that open doors before you even knock. And surprisingly, a large portion never gets touched at all. In this video, we're not just listing mansions and jets. We're breaking down what $100 million really buys in 2026 across assets, access, and power. Where does the money actually go? How much of it is lifestyle? How much of it is strategy? And why is $100 million wealthy, but not untouchable? Stay with me, because by the end of this journey, you might realize something unexpected. The most powerful part of $100 million isn't what you can see, it's what it quietly controls. If you have $100 million in 2026, the first move isn't a yacht, it's territory. Because real estate at this level isn't about comfort, it's about positioning yourself in cities that compound power. Imagine securing a $35, $45 million penthouse in New York City, not just for the skyline views, but because Manhattan remains a global capital of finance, media, and influence. Your address becomes a signal. Or perhaps a waterfront villa in Dubai, where ultra-modern infrastructure meets zero income tax and a rapidly growing high net worth population. The property isn't just stunning, it's strategic. Or a harbor-facing residence in Monaco, where scarcity itself drives value. Land is limited, supply is tight, entry is exclusive. Here's the flex moment. Private elevator access. Concierge, who knows your schedule. A view that only a few thousand people on Earth will ever wake up to. But beneath the marble and glass, something smarter is happening. At this level, prime property functions as capital preservation, currency diversification, inflation hedge, status reinforcement. It's not about owning a mansion, it's about placing capital in global safe zones. And here's the reality most people miss. Even at $100 million, you don't buy 5 mega mansions. You choose carefully 1 or 2 anchor properties because liquidity still matters. Property taxes, maintenance, staff, security. The illusion is extravagance. The strategy is allocation. This is where $100 million starts transforming from visible wealth into structured power. Once territory is secured, the next upgrade isn't bigger walls, it's faster movement. Because at the $100 million level, luxury isn't defined by size. It's defined by control over time. Picture this. You arrive at a private terminal, no crowded departure boards, no security lines, no boarding groups, just a quiet lounge, a handshake, and a short walk across the tarmac. Inside the cabin, leather, silence, precision. That's not just flex. That's compression of time. Now here's where it gets interesting. Owning a long-range private jet can cost $40, $70 million upfront. Operating it, several million per year. So most $100 million individuals don't fully own a jet. They use fractional ownership or charter structures. Strategic, not reckless. Same with yachts. A 60-meter super yacht in the Mediterranean sounds cinematic. And it is. Think summer anchored off the coast of Monaco or cruising near Dubai at sunset. But annual operating costs can run 8 to 10% of purchase price. That's millions just to float. So here's the flex moment. walking from jet to yacht in the same afternoon. But the financial layer underneath, mobility is structured, not impulsive. Because at this tier, travel isn't indulgence, it's efficiency. It's being in London for breakfast, New York for meetings, and back in Dubai before midnight without friction. The real luxury isn't the leather seats, it's the elimination of waiting. And when you remove waiting, you gain leverage. That's when $100 million stops feeling like money and starts feeling like acceleration. By now, territory is secured, mobility is optimized. But here's something subtle. At this level, power doesn't shout, it whispers. Because wealth above $100 million doesn't rely on logos, it relies on signals. Imagine walking into a private showroom in Geneva. No display windows, no crowds, just quiet conversation and velvet trays. On your wrist, a limited production piece from Patek Philippe, not bought impulsively, but allocated after years of relationship building. That's the flex, not the watch itself. Or consider pulling up to a private members event in a deep-toned Grand Tourer from Ferrari. The engine note is unmistakable, but controlled, refined. Here's where the financial layer comes in. Ultra-luxury watches and rare cars operate on scarcity economics. Limited supply, long wait lists, high secondary demand. Some references appreciate, some plateau. Some outperform traditional assets during certain cycles. But the real return? Social capital. These assets function as conversation keys in rooms where billion-dollar decisions happen quietly. It's not about impressing strangers, it's about being recognized by insiders. And here's the interesting truth. At $100 million, you don't need 20 watches. You need the right 3. You don't need a garage of 15 cars. You curate because curation signals discipline. And discipline signals intelligence. This is where luxury shifts from consumption to coded communication. And the code? Only a small circle can read it. Up until now, we've seen what $100 million looks like. Now let's talk about what you don't see. Because the most powerful part of wealth is invisible. Behind every penthouse, every jet charter, every rare watch, there's structure. Private banking suites, quiet boardrooms, conversations that never reach headlines. This is where institutions like UBS or JP Morgan Chase enter the picture, not as logos, but as infrastructure. At $100 million, you're not just investing, you're allocating. Typically, capital spreads across global equities, private equity, real estate funds, bonds and fixed income, alternative assets, cash reserves for opportunity, and often a small private team, a family office or advisory structure, oversees risk, tax efficiency, liquidity, and long-term strategy. Here's the controlled flex. Direct access, not retail platforms, not public hotlines, but senior advisors who pick up when you call. Yet here's the grounding reality. Even with $100 million, you can't afford chaos. Bad allocation decisions at this level don't cost thousands, they cost millions. So discipline becomes more important than luxury, because while the outside world sees yachts and skylines, the real game is being played in spreadsheets, capital markets, and long-term positioning. This is the layer that separates someone who looks wealthy from someone who stays powerful. So here's the question no one likes asking. Is $100 million enough? On the surface, it feels untouchable. But once you break it down, a $40 million property, a diversified portfolio, operational costs, advisory fees, security, lifestyle, earn rate. Suddenly, the number starts shrinking. A fully structured luxury lifestyle, multiple residences, private mobility, staff security, curated assets can easily require $5 million annually to maintain comfortably. That means sustainability matters. Because real power isn't about spending the $100 million. It's about making sure it keeps generating freedom. And here's the shift most people don't see. At this level, wealth becomes less about consumption and more about insulation, instability. From dependency. The penthouse is impressive. The jet is efficient. The watch is rare. But the true flex, optionality. the ability to move countries, to pivot investments, to access private deals, to say no without consequence. That's what $100 million really buys in 2026. Not just assets, but controlled leverage over your environment. And maybe that's the biggest realization of all. Wealth at this level isn't loud. It's quiet. It doesn't chase attention. It designs freedom. If you enjoyed this deep dive into how capital turns into influence, subscribe, because next we're breaking down what happens when wealth moves from $100 million to billionaire territory. And that's a completely different universe.